Greetings, traders out there in Traderland. My name's Dez here at Grok Trade. It's Thursday, April 18th, 2013. This morning, the Labor Department said that the number of individuals filing for first-time jobless benefits rose by 4,000. Now we are over 350,000, economists say, and that was a tick in the wrong direction. And with that news, we did go bearish today. Broad markets were off, and the Dow and the S&P took its third largest drop for the year, and it happened today with the Dow down 81 points, the S&P off 0.7%, the Dow off 0.6%, NASDAQ off 1.2%. Big sell-off here in techs, and small caps off 0.6%. However, I want you to pay special attention to the financials here. Banks did not do as poorly as the broad markets as a whole. They are only down 0.3%, so there's relative strength in the financials. The volatility index here is up 5.45%. The fear indicator does tick higher, up here above 17. Gold up more than 1%. Silver dropping a fraction. Crude oil up nicely, more than 2%. US dollar down a fraction. And you have utilities, defensive sector, up 0.3%. Taking a look at the S&P 500, you'll see that we started off at this high, hit our head at this trend line. We started heading downward. We broke a trend line that should have been support, and the 20-day moving average, the blue moving average line. But the very next day we found support at the minor trend line, the gold one coming higher, and we rallied higher back above what was supposed to be support, should have acted as resistance, but we popped that. And then 2 days ago we opened and then crashed down below it again, down below the 20-day moving average and that support line. However, we found support coming across here. But on Thursday, today, we make a lower high and a lower low, going lower than those support areas. We do have a rising 50-day moving average. What's interesting, though, is we closed below it. That's not good. The NASDAQ had a big sell-off today. The day before, we did get a close already below the 50-day moving average. We gapped higher and then sold off the rest of the day. We do have a rising 100-day moving average to be watching for. Google daily, big sell-off today on volume, and we are approaching the rising 100-day moving average. Apple off 2.7%, and you'll see we keep dropping. We're below $400 now. We're at $392. You'll want to share this video with your Apple friends, but this Apple is a monthly chart, and with a Fibonacci line drawn here, we have a pullback right to the 50% Fibonacci, which puts us at 392. This also is a support area. I'm saying at this moment that Apple is in a major buy territory, so be looking for an opportunity for this, perhaps on a weekly chart. Now on a weekly chart we are too early to make a purchase. However, we do have a wedge that could be forming, especially if we get a bounce off the rising 200-day moving average. If we get this, find some support from this activity back here, and this breaks out, mainly if we can get above 422, 425 area, then that could be a buying opportunity. So you heard it here. You'll notice something new on the website. When you go here, you'll notice the sign up form. All you need to do is put in your first name and email, and you are going to get 6 tutorial videos on teaching you how to trade stocks. And these videos range between 40 minutes to 30 minutes, 30 to 40 minutes, and you will get those tutorials emailed to you. You'll get the first one immediately, and then every 2 days you'll get another one emailed to you. So there's 6 in total, and they are completely free. And I actually stayed up until 3:30 a.m. last night editing those videos, so they were perfect for you guys now. So come sign up for these so you can get on the list and start getting those emails immediately. They'll be of great help to you in your trading. Take care, and we hope the very best. Make sure that you always remember that capital preservation comes before making a profit.